Gold Bar Bot is an AI-powered model designed for the real-time analysis of the gold, silver, and gold miners markets. Its greatest strength is identifying timely exit points before the peak of an asset bubble, thus avoiding catastrophic losses like many traders experienced in January 2026, while preserving the tremendous gains made during bull markets. Gold Bar Bot also identifies and qualifies buy opportunities for adding to the core positions of buy and hold investors, or exit strategies for shorter term and leveraged traders. Here is the latest update from goldbarbot.com for August 21st, 2026. Let's look at the latest gold technical risk chart. Gold's move is becoming increasingly extended. Friday's $4,624.10 COMEX close capped a 5.56% weekly gain and the third consecutive weekly advance. Gold has gained about 14.2% in only 3 weeks. That pushes correction risk from yesterday's 86 to 89 and overvaluation from 75 to 78. The distinction between correction risk and crash risk remains important. Gold is moving rapidly enough that a normal retracement risk is now extreme, but it is still roughly 13% below the January record of $5,318.40. Therefore, crash risk rises only to 72, not into the 86 to 100 extreme sell zone. The macro support is also real. Dollar weakness, fiscal debt concerns, and Treasury buyback developments have all supported hard assets. The dollar fell to a 3-month low against the euro Friday. Gold core action is hold/do not add. Buy opportunity falls from 43 to 38, moving gold into the unfavorable band for new purchases. Now let's look at the updated silver technical risk chart. Silver finished around $69.47, gaining 6.89% this week and approximately 20.6% over 3 weeks. That acceleration raises correction risk from 85 to 88. However, silver remains roughly 39.6% below its 2026 high of $115.08. That is why silver's overvaluation and crash scores remain considerably below the levels we saw for the April 2011 and January 2026 blow-off tops. Today, correction 88, extreme. Overvaluation 78, severe. Crash 72, elevated. Buy 41, neutral weight. Silver therefore remains slightly more attractive than gold or GDX on the buy index because it is still so far below its January peak. Silver core action is hold/do not chase. If we look at the latest technical risk chart for the gold miners, GDX remains the most stretched part of the complex. The miners have been displaying substantial operating leverage to bullion. On August 19, for example, GDX surged about 9.1%, while spot gold rose approximately 3.5%. Friday's available intraday SIBO quote showed GDX around $102.68, up about 2.8% at that point in the session. That pushes GDX scores into correction 91, extreme, overvaluation 81, severe, crash 76, severe, buy 34, unfavorable. GDX is consequently the closest of the 3 assets to a genuine de-risking configuration. But even here, crash 76 is not extreme sell. Under the core strategy, I would therefore still not recommend a taxable core sale. GDX core action is therefore hold/no new purchase. Finally, we'll look at the combined precious metals risk index, which is the weighted combination of the gold, silver, and GDX risk indexes. The complex has moved from merely stretched into a region where a short-term correction would be unsurprising. But our core position rule is deliberately designed to prevent exactly the mistake of realizing large taxable gains every time correction risk becomes high. The key question is whether conditions are severe enough that the expected decline exceeds the tax hurdle. At present, I don't think they are. Portfolio action is therefore hold core, do not add. The warning level has increased materially, particularly in GDX, but today's configuration still looks more like high correction risk within a powerful precious metals trend than an imminent 2011 or January 2026 style blow-off collapse. That concludes our latest video update for the precious metals market. For a deeper dive, Check out our other free charts and AI analysis at goldbarbot.com. In addition to tracking risk, we also assess buy opportunities for gold, silver, and the miners. Backtesting our AI model produced a warning to begin scaling out of metals on January 9, 2026, with a strong warning to sell all positions by January 23rd, a full week before the historic crash event on January 30th. Could you have benefited from that advice? If so, check out goldbarbot.com. New updates are posted several times per week. From all of us at goldbarbot.com, we wish you good luck and good fortune investing in precious metals.